Let's talk stocks. At the conclusion of trading Tuesday, the 29th of August, all-share index soared to an all-time high of 66,490 points, 0.34. It was very much celebrated. You can see the previous high in 2008, 66,371 points back on March the 5th, 2008. So, as far as this being a historic milestone for the market, in fact, year to date, I think the market is up as of yesterday, almost 30%, 29.73, is that? Yes, 29.73%. So we're going to be talking about the exchange. We're going to be talking about opportunities. We're also going to be asking the question as to whether or not this is disconnected from the wider economy. That's the wider Nigerian economy. Joining us to discuss further in Houston, Texas, Muktar Mohammed is the CEO of Finance with Muktar. Here in Lagos with us, there he is, Temitope Jolaoso. She is a portfolio manager, First Ally Asset Management. Good morning to the both of you. Thank you so much for joining us. Muktar, let's start with you. How do you interpret this historic rise in the Nigerian Stock Exchange?
Reuters, I think the Nigerian market have suffered so much since 2008. I think globally, most of the market have recovered and got into all-time low, all-time high, and where they were in 2008. And this is the first time we are seeing Nigerian market going above that. And for me, it's good. It's good for the market. It's good for the economy, and especially when this is driven by local investors. I keep saying this. The last time in 2008 that we had this, it was mostly driven by foreign investors. But now it's the local investors that are really driving this bullish move that we've seen in the exchange. So that's what gives me joy. I mean, it could be sustained in the long term. So for me, it didn't come as a surprise when you look at the policy pronouncement. I say policy pronouncement. Now we've seen policy pronouncements take the market to where it is today. We are begin to see very soon where we see policy implementation. We've seen the implementation, and if you look at the only two implementation that we've seen, or when I say one even, it's been in the floating of the exchange rate. When you talk about the deregulation of the petroleum sector, we have not seen that yet, because we are still getting exchange rate, and NNPC is still the sole importer of petroleum product into the market. NNPC itself is not even listed in the Nigerian stock market. Most of the companies that are listed in the market are in the downstream sector. So we are not seeing an all-round improvement. So where the floating has been very volatile. So you are not seeing the foreign investors coming in yet, because they want stable exchange rate before they begin to come in. So what is driving the market now is clearly the positivity of the Nigerian investors towards the equity market.
Thank you for that, Muktar. Temitope, what's your view on what we've seen in the market so far?
Largely, I agree with what Muktar has said, but what I would like to provide context to is in terms of foreign portfolio investors in the market as well. If we go back 2018, participation in the market was around 51%, and back to the numbers we saw in July, we had about less than 6%, which is significant. So to bolster what Muktar said, we have a lot of domestic participation in the market. And also, if you look at the structure or in terms of the fundamentals of the market, in the last 5 years, we will see the number of participation or additional listings we've had in the market. We've had the telcos, we had the likes of Boa Foods in the market, Boa Cement in the market. If you look at the top 10 names in the market, these are the names that contribute over 30% of the total market already, just listing those few names. And participation in those names has significantly supported the interest that we have seen in the market. Even in terms of cycle of foreign investors trying to repatriate their funds, we saw increased participation in the likes of Seplat and Airtel as investors were trying to repatriate their funds. That supported the gains that we saw on those names. Now, fast track to in recent times, right, where we are talking about the deregulation and the FX unification, that has also supported the market. But largely, we've also seen a shift in the fundamental of the market that has also supported sentiment. And also, if we talk about participation in the market, we've also seen increased participation from the PFAs, right? We've seen significant growth in pension funds, AUM, and the participation in the equities market as well. And that has also supported local participation in the domestic market.
For our viewers, because you analysts like using technical terms, AUM is...
Assets under management.
Assets under management. Thank you, Temitope. Okay, so I do have to ask you both, is Muktar, let me come back to you and Temitope, I'll get your thoughts on this as well.
Sure.
Is the stock market disconnected from the wider economy, Muktar?
Well, ordinarily, it's not supposed to be so. But when you look at our economy, definitely our economy is an oil-driven economy. And I just made a point. The largest importer of refined petroleum products is not listed in the exchange yet. So there's a little bit of disconnect. And when you look at the non-oil sector, like Temitope said in the studio, you just have the lack of Boa food, maybe Dangote sugar, Dangote cement. Those that are there. So it's like I always say, the market is not disconnected, but the market have a life of its own. Sometimes it moves with the life of its own based on the market results, especially results from company. But those results cannot be sustained for a long time without the economy kicking in. So you have a market, you have a life of your own, but to sustain that life of your own, you need the economy to be very, very stable, especially the microeconomic space. So there's a little bit disconnected, people will say, but in the longer run, definitely there's always a synergy between the market and the economy.
Temitope, what's your take? Is the NGX disconnected from the wider economy in Nigeria?
My view would be like the NGX or the market, the equities market, is a leading indicator for the economy. And if you look at, when we start to look at what you expect to happen in the economy, investors start to take position ahead of those expectations, because when those expectations then play out, you are able to benefit from the positions that you're taking earlier. So it gives a view as to the direction that you expect the economy to go. So I believe it's a leading indicator for the economy.
You know what we should have done? If we put that chart back up, what we should have done, we should have, as we charted this NGX, we should have charted probably Q2, or rather annual GDP growth in Nigeria. Just we should have, we'll probably do that next time. We'll put both of them on the same chart. Okay, Muktar and Temitope, for those that have missed out on the rally, is there any room to get in? What do they call that? Is it FO, fear of missing out? Yeah, FOMO. So FOMO Muktar, what's your advice to anyone who says, okay, can I still jump into this rally and can I still make some money from what we've seen?
Reuters, like I always say, the stock market is like a bus stop. They will always come another box, and there's always a boss. So wherever you are going to, it's not the last bus. You still wait there, you see on that bus, that will take you to your direction. But then that is on the lighter note. But I think there's still opportunities when you look at some of those equities, though some of them are in all-time high. The fundamentals are still very, very strong. There's still room for a lot of growth. So I don't think they have actually missed out very well. They have missed out a lot. But again, they must look at investing in fundamentals, investing in value investment. So when the market begins to go up, like we've seen, you need to begin to do value investment. So for my advice for them is that it's time to do value investment, but then you need to also talk to your brokers so that they will look at the fundamentals and also look at your risk appetite. And sometimes the stock market, when it's going up, that's when everybody's keep coming in. And sometimes I say that's not the best time to come to the market. The best time to come to the market is when the market is down. That's when you can maximize profit. But again, I don't think it's all side for them. Like I said, it's a bus stop. More buses are still coming. All right. There's still more opportunity in the market.
I like that. It's a bus stop. So tell me, is it a bus stop? And do you think that there's still a chance for people to make gains on the market?
Definitely. I agree with what Muktar has said. But what I would like to add is that apart from looking at stocks that have strong fundamentals, you will also want to look at stocks that have relatively less sensitivity to the overall market, because what that then does for you is that if markets start declining, you have a bit of a shock absorber. And also I'd like to add that diversification is very important at this level. Given the rally we've seen in the market, it's very important to have a diversified portfolio and consider stocks with strong fundamentals and also have less sensitivity to the general market.
Great stuff. All right, we're going to continue this conversation after the break because I want to ask you folks about interest rates and whether or not that's a headwind for stocks. And also, we're going to be looking at some of the sectors as to how well they've performed and whether or not we think they'll keep doing well. So we'll continue the conversation after the break. We're looking at the historic performance of the NGX in Nigeria with Muktar Mohammed and Temitope Jolaoso. After the break, it's the Global Business Report. Stay tuned. Welcome back to the Global Business Report here on Arise News. We're still talking about the historic milestone hit by reached by the NGX, that's the stock market here in Nigeria, and people want to make money, okay? So that's why we have Muktar Mohammed, of course, with us, Houston, Texas, and here in Lagos, Temitope Jolaoso, who are both, of course, analysts that cover the market. So we've talked about the highs, where Muktar says, of course, the market is like a bus stop, and there's always going to be another bus for those who want to try and catch the wave. I want to ask you both about interest rates. It's been said that interest rates in Nigeria need to go up in order to attract foreign portfolio investors into the country. Muktar, let me start with you. Do you see that happening, and could rising interest rates for bonds, treasury bills attract capital flows out of is that a headwind for stocks in your view, if interest rates have to go up?
Yeah, Rotos, it is. Like generally, it always should be, because that means investors will begin to look at less risks intending to go to the bond market, or what we call the fixed income space. But in the terms of Nigeria now, the major challenge you have as a country is not because the interest rate has gone high, then you attract investors. Presently now, the challenge you have is that there is volatility in the FX market. No investor wants to come into your market when there's so much volatility. They want to come in when there is stability. And so as it stands now, investors are still waiting. And you not forget that the interest rate also have been hiked in the US, which happen to be one of the global economy that actually drive funding into Nigeria. So most of them are looking at less risks, again, coupled with the volatility in the exchange rate. So they are not coming in yet. But I feel they will come in the near future, in the near term. But they will only come in when there is stability. So for now, you won't see so much of the interest rate hike affecting the market, because what we see in the market now presently is that the foreign investors are not coming because of the volatility of the exchange rate.
What's your view on that?
Yes, I totally agree with what Muktar said, because if you look at the component of the return for foreign investors, apart from the return, you also look at the FX component. So even if you're getting a high return, if the FX component erodes or eats out all the profit you're getting, it doesn't really make sense for them, right? So the FX has to be right. You have to have a clear exit strategy for your funds if you're bringing them into the country. And if you don't see a clear exit strategy, it's not attractive enough for you to want to dip your legs into the waters.
Yeah. Okay, since we're talking FX now, the NGX is considering dollar-denominated securities. I want to get your thoughts both on if you think whether this is a good idea and what will be the implication for the market if this goes through, because they're talking to the SEC about this. So considering, Muktar, what do you think?
Rotos, sometimes we in this country, when there is what is invoked, maybe less everybody wants to be involved in what is invoked. I don't see why the NDX is looking at that at the moment, because like I said, it's not their mainstream. They want to attract effects into the market. They are not the one to attract effects into the market. It's the monetary policy and the macroeconomy. Once they are stable, effects will definitely come into the market. It's not that we don't have dollar-dominated investment in the market. Like I said, it's a surplus pays in dollars. EcoBank, ETS subsidiary pays in dollars, but they've always been a challenge with supply. So they have to go back to using the official rate, which used to be, then they convert it to investors with the official rate that time. And now we have the IE window being the official rate. So they will still do that. They're not looking at the technicality that if Nigerian investors are investing in dollar-dominated assets, many of them will have a domiciliary account. How is the NGS or the Securities and Exchange Commission wired to be able to do e-mandate through DOMS account? Because that has been the challenge that most Nigerians have had when we used to have this dominated. I think the NGS will think about bringing in products and also let the other regulators that need to make supply of FX into the market do what they have to do. FX will just generally come into the market. So this is a situation whereby everybody seems to be want to boost the Nigerian economy with FX. For me, I don't think the NGS will join that bandwagon as it stands now. They have had other products, but we've not even seen the light of those products. So they need to just make sure they are doing the right thing, not going out of their previous. We've always seen that what have happened in the previous administration is we see the CBN going into sectors that are not supposed to be involved into direct intervention instead of just being monetary policy. The NGS shouldn't be thinking of that. Let them just wait. Like I said, when there is volatility, you cannot attract any dollar-dominated company to come to your country. It will not.
Okay. Temitope, what's your view?
Yeah, definitely I agree that the FX issue poses a significant challenge for this idea, so to speak, because the Nigerian economy is largely dependent on consumption. It's a consumption-driven economy, and a significant portion of that consumption is imported. So if that fundamental is not addressed, and we don't have a clear strategy for our FX, it's still not attractive.
Okay.
And it's going to be maybe in the long term, when we've addressed these issues, these fundamental issues, then we can revisit this conversation.
Okay, fine. Well, I actually want to revisit something now. If purchasing power, since we're talking about foreign exchange, Muktar, what's your advice for domestic investors worried about naira weakness and eroding purchasing power? Isn't foreign exposure a must for the Nigerian investor as far as a complete portfolio is concerned?
I agree with diversification of the Nigerian investor. You need to be a global player. The era whereby you are just sitting in the Nigerian stock exchange alone is gone. The market will become a global village. Yes, as an investor, you have to do that. But again, when you are investing in dollar-dominated assets, I always ask this question: are you spending the dollar here in America, or are you going to spend it in Nigeria? Okay, now, if you are spending it here in America, that means you need to have interest of almost 12% or between 15%, because the inflationary figure here is about 10 point something percent, between 9 point something percent and 10 point something percent. So if you have dollar, and that dollar is not giving you a return about 9 to 10, 12 to 13%, definitely means you are losing money. So the only time you have value for your FX investment is when you bring it to Nigeria and change it at that high interest rate. So which way or that way, you end up having more purchasing power, because when you change your naira to your dollar in the Nigerian economy is better. But when you want to spend that dollar in the American economy, then you need to look for a higher return on that dollar-dominated asset. So that's my take on it.
Thanks for that. Okay, tell me, what do you make of this?
I agree to having a mixed portfolio that has a component of FX exposure. And there are some instruments in the market, Eurobond, corporate Eurobonds to be specific, that have double-digit yield currently. So if you have exposures to those, it also helps support the return for your portfolio. And if you're an investor here in Nigeria and you have naira liabilities, it's the importance. It's not something we can understate.
Yeah, so it has to be diversified. All right, only a few minutes to go. Muktar, can you give me some sectors that you like before we wrap up? Just talking general, as far as the sectors that you would look at going forward for investors that look to what stocks they want to buy on the exchange.
Reuters, my key sector is the one that has liquidity, and liquidity is always the banking sector. So for me, Tier 1 banks are still there. Fortunately, I say fortunately, it depends on which side you are. Fortunately, their result has not been approved by CB. Maybe CB have not finalized their result to be put in the market. And if you look at the Tier 2 banks, which results are out with the kind of performance, you're excited about what will happen in the Tier 1 bank, especially a bank like Access Bank. So that's a good one. Then you look at Fidelity Bank, also a Tier 2 bank that is beginning to look like a Tier 1 bank going into the future. It's a good buy. Then conglomerate is Sorbet. You've seen the movement in Dangote Sugar and NASCOM. And this is as a result of trying to bring inputs together to become Dangote's food. Remember, we saw this play out in Boa Food when they were listed at a low of almost, at the low of about 30 naira. And it had about 100 something like that. So if you are looking at what has happened before, because the stock market, they say sometimes you look at what has happened before, then determine what will happen in the future, and then you take position. Then you could also be looking at either NASCOM or Dangote Sugar. And also, we've seen that the insurance sector, if you're a trader, is a good sector to be if you're a penny trader. But it's, like I always say, it's very volatile, but it can give you high returns in terms of profitability. But when you are looking at investing for dividends, I don't think that's where to go. If you are looking for profitability, taking profit, being a trader in the Nigerian market, then you need to look at the insurance sector too.
Thanks, Muktar. All right, Temitope, you get the last word. What sectors do you like? If you want to mention any stocks.
In addition to what Muktar said, I would also consider the oil and gas. From the removal of fuel subsidy, we believe that this fuel subsidy was like the macro factor that was affecting all the players in that space, and it was sort of masking up a lot in terms of their capability. What we've seen now, what we start to see now is we start to see a lot of competitiveness in that space, and we believe there are opportunities there, especially for players that have strong lubricant business, because the margin for lube is very high, and we find that very attractive. So when we're looking at those players that have strong lubricant business, and LPGs are very attractive.
So that's downstream oil and gas, yeah?
Yes.
Fantastic stuff. Temitope Jolaoso of Ally Asset Management and Muktar Mohammed, CEO of Finance with Muktar. Thank you both for telling us how to make money. We appreciate your insights on the exchange and the wider Nigerian economy. Thank you for your time.